This video is a deep dive on MicroStrategy. We are going to look at the value relative to Bitcoin, relative to the earnings, relative to the general market. The question is, does it make sense to buy MicroStrategy over other stocks, over Bitcoin? Is it in general a good investment right now? Now clearly, since MicroStrategy started buying Bitcoin, its relative rank within the stock market improved. So we see two lines over here. The one in blue is the Nasdaq rank, as in what's MicroStrategy's market cap relative to other stocks in the technology sector. 1 year ago, it was still at 100. This now, with the recent Bitcoin rally, went up to rank 55. At the bottom, we see the S&P 500 rank. So MicroStrategy was between place 300 and 200 for quite a while, but then over time it went up. Now it's at place 140. So relative to other stocks, MicroStrategy definitely has benefited. Now since September of 2020, MicroStrategy is buying Bitcoin. And each green dot over here represents one point in time where MicroStrategy bought. And what we see here as this dotted line, that's the average purchase price that MicroStrategy got Bitcoin for. So as it's now recently buying up more and more Bitcoin, the average purchase price is increasing. And what we also see is that the purchases during the bear market did not lower the average cost base that much. That's because MicroStrategy tends to buy more during a bull run and less in the bear market. Now, why is that? It's not because Michael Saylor is very bad at timing the market. It's simply because Michael Saylor doesn't have the ability to buy more. Because in order to issue new debt, MicroStrategy has to give all the assets. And the more the assets are worth, as in the Bitcoin that MicroStrategy is holding, the more it can borrow against that. So there's most purchasing power available whenever the Bitcoin price is high. And that's why MicroStrategy tends to buy more when Bitcoin price has already risen. So it's unfortunately not buying low and selling high. It's always buying, but it tends to buy more whenever the price is already up. That wasn't too much of a problem for the stock performance though. What we see over here is the net asset value premium. So how much do we pay for each Bitcoin that MicroStrategy holds when we buy instead the stock? Currently that NAV premium is at 2x. So we're paying roughly 3 times as much for Bitcoin when we buy MicroStrategy instead of Bitcoin directly on the spot market. The financial wizardry that MicroStrategy is engaging seems to be valued by the market. The market is putting a premium on that strategy. Another way to look at this is how expensive is MicroStrategy stock relative to Bitcoin, or how many Satoshis do we have to buy for one share of MicroStrategy. And that's this chart over here for the last year, and for all time we get this. So over time, MicroStrategy stock clearly outperformed Bitcoin. Now with buying MicroStrategy stock, we don't just get exposure to the current holdings of Bitcoin, right? We also get exposure to the leverage that MicroStrategy is engaging in. We also get exposure to the actual company that still has regular earnings. We can have a look at the price to earnings ratio. And that's actually not too bad. The current PE ratio of MicroStrategy is 12x. The market as a whole is currently at 36x. In other words, the software business that MicroStrategy is still engaging in is very cheap. This is a very long-term chart. It starts in 2009. And what we've got over here is the MicroStrategy stock price. And at the bottom, we have the volatility of the price movements. So MicroStrategy stock was rather risk off for the technology world, as in the price fluctuations were pretty small. Once MicroStrategy started buying Bitcoin, the volatility went up massively. Prior, we had an annualized volatility of around 40. Now it's at around 120. Now it's even more useful than just looking at the volatility or the price fluctuations of MicroStrategy stock over time is to look at it in relation to Bitcoin. As in, is MicroStrategy becoming more and more risky relative to Bitcoin? Or is MicroStrategy getting levered up too much? We might find the answer over here. So this is the realized volatility of MicroStrategy stock relative to Bitcoin. And this starts again very early on. And this is where MicroStrategy started buying Bitcoin. And it's not like the volatility shot up once and then is stable. Instead, MicroStrategy volatility continues to increase relative to Bitcoin constantly. In other words, the market is perceiving that there's more and more risk in the stock. Bitcoin is already risky, but MicroStrategy stock becomes more and more risky relative to Bitcoin. This is not necessarily a good sign, right? Because the higher the volatility is, the more likely it could potentially be that MicroStrategy goes bust altogether, right? Bitcoin will always be around. That's not so clear with MicroStrategy that has more and more leverage on the Bitcoin price. A nicer chart would be a stable volatility relative to Bitcoin, not necessarily one that continues to increase. Just have a look at how this looks like in practice. So we've got the Nasdaq 100 here in purple, and we've got the Bitcoin price here in orange. MicroStrategy is this line over here, and Tesla is the red line over here. Tesla and MicroStrategy stock have roughly the same volatility. Compared to Bitcoin, it's much more volatile compared to the Nasdaq 100, of course, as well. Now, if you're considering to buy some MicroStrategy stock, and in order to get the proceeds, you consider selling some of your Bitcoin or selling some of your QQQ, right, your Nasdaq 100 ETF, then make sure that you don't transfer all of the funds into MicroStrategy. Maybe sell $1,000 and only put, say, 500 into MicroStrategy, and then put the other 500 into something risk off, like gold, for example. If you want to keep your overall volatility in your portfolio stable, if you don't want to increase the risk overall, it's better not to just transfer all the funds to MicroStrategy, because again, MicroStrategy is one of the riskiest stocks out there. You don't want to get caught up in a massive crash. Here's another representation of the same effect. What we've got over here is the maximum drawdown of Bitcoin from the all-time high. So that's in orange. And in red, we see the maximum drawdown of MicroStrategy stock. There was always more volatility in MicroStrategy stock, but now this seems to be even more aggravated. Again, the volatility of MicroStrategy relative to Bitcoin continues to increase over time. And here's an explanation why. What we see over here is how many Bitcoin are held per MicroStrategy stock. So you've got this for the diluted shares and the outstanding shares, and both lines go up over time. And again, this is a sign of more and more leverage. It's not like we've got a constant leverage instrument, we've got more and more risk on the stock. Here's the same chart, not just for the last year, but since MicroStrategy started purchasing Bitcoin, again, things become more and more risky. And I wonder if at some point this will stop, because if it doesn't, then of course it's just a matter of time until MicroStrategy blows up. I mean, the stock has in the past survived quite a few drawdowns, right? The average cost basis is here in blue and the Bitcoin price is in black. And we can see how much supply is in profit and loss. And during the downturn, of course, most of MicroStrategy supply was in loss. The Bitcoin price was half of what MicroStrategy paid for it. Currently, the average cost basis is at 66. Can it survive again a drop of 50% below that, meaning 33K in Bitcoin? It's unclear, right? Because now there's more and more Bitcoin held per share of MicroStrategy. Would it survive a drop to 60K and to 50K? Probably yes. Here again, the MicroStrategy cost basis with the Bitcoin price, and at the bottom we've got the market value to realized value. Ideally, of course, we would buy the stock when Michael Saylor is in losses. That's when people will start to potentially panic. Now, since the stock becomes more and more complex, and since Michael Saylor is buying more and more Bitcoin, not just over time, but even relative to the enterprise value of MicroStrategy, I personally rather stay away. I think it's better to buy plain old Bitcoin. And if we want to get leverage, we can create that leverage ourselves, right? We can take a personal loan and buy Bitcoin, so we can lever our own cash flow, say our salary. Or we can use a decentralized finance protocol like Aave, and we can use Bitcoin as a collateral and then borrow stablecoins against this to then buy more Bitcoin and then create the 1.5, maybe even 2x leverage ourselves. There's no need for the overhead of buying MicroStrategy stock unless you have to because of tax implications and 401k setups, etc. If you don't have to buy stocks, then I believe the pure way to get exposure to Bitcoin by buying spot or by using DeFi is the better approach. Clearly, the overall situation in crypto has changed recently, and there seems to be one event that started it all off. What we've got over here is the Bitcoin price, and this red circle marks when Donald Trump launched his meme coin. So that's this over here. Most people got burnt with that meme coin. If you bought this in the first few hours after launch, you made money. If you didn't, you lost money. Since the launch, Bitcoin lost 21% of its value. Of course, the Trump token lost much more. A lot of other altcoins also lost more. And so the majority of people lose, of course, when the market looks like this. There's pretty much nobody that has their entire crypto portfolio in Maker or in Bearer or in Bitcoin Cash. Even if you hold those tokens, you probably have a diversified portfolio and you're down with all of those other tokens. Now here's something that's not so obvious. We see Bitcoin over here. Bitcoin went up by 14% in the last year, and this is now the top 100 ordered by their performance in the last year. And there are a few altcoins that did better than Bitcoin. Two of them being gold derivatives, so PaxG and Tether Gold, but there's also others that performed slightly better. But the vast majority of altcoins actually performed much, much worse. If you picked a random altcoin in the top 100 1 year ago, you've got roughly an 80% chance that you underperformed simply Bitcoin. And that's of course a problem, right? Because altcoins have more risk, and so in theory they should also perform better, especially during times when Bitcoin tends to go up. And so I don't try to find the needle in the haystack. I don't try to pick the bearer coin in order to then make money. I do the exact opposite. I bet on the vast majority of altcoins doing worse than Bitcoin. And most of the time, that strategy makes money. Have a look at this, for example. This is Matic relative to Bitcoin, a very constant underperformance. Or this is Balancer relative to Bitcoin. Again, a very constant underperformance. And we can make money from that relative valuation. We don't have to bet on Balancer or on Matic going down versus the US dollar. We can bet on it doing worse than Bitcoin and make money when this thing continues to go down. Or we can also mirror that chart, right? We can just bet on this continue to go up. This is now Bitcoin relative to Matic. That's the logarithmic chart. This is the linear chart. So why does this happen? The reason is tokenomics, right? It's the altcoins that print more and more tokens, and that token allocation goes to the insiders, it goes to the developers. And for meme coins, we don't necessarily have an expanding supply, but for meme coins, we tend to have a lot of ownership by the insiders as well that simply sell off over time. And that's why Bitcoin performs so well versus all of those altcoins. And that's why I believe those are the kinds of charts we want to bet on. Yes, we can of course try to time Bitcoin itself, and we can try to buy this at 16K and then sell it at 100K. And this is a possible way to make money. I'm also trying to time Bitcoin. But why would we try to pick the few altcoins that perform still okay? Why not just flip this thing around and make money when those bubbles are red? So for example, over here on the 6th of December, I have made a premium update video how I have sold some of my Bitcoin because a liquidity crunch was incoming. So that was over here. I've made another announcement on the 25th of February how I've sold all of my speculative Bitcoin and how I'm selling all of my altcoin positions. And that was over here. I opened a position betting on falling prices of Chainlink on the 23rd of January. I opened a short position on Dogecoin and on PancakeSwap on the 14th of February. And the reason why I'm sharing this is because I've now closed the Chainlink position, so it lost 42% in the span of a few weeks. I've also closed the Cake short, which went down versus BNB by 27%. And I've also closed the Dogecoin short, also in profit. So really, when you know what you're doing, if you know how to do the proper risk management, that you don't get liquidated, and when you have the odds in your favor during times like this, when most altcoins underperform Bitcoin, then it is rather straightforward to make money like this. We don't have to find the needle in the haystack. We don't have to make 100x returns with a random meme coin. We can simply just let our capital compound by making 20% here and 40% over here. Most people are scared of betting on falling prices. But that's why I've made dedicated tutorial videos on the topic, how to do the proper risk management, how to set up those positions also in DeFi and Web3, not just with centralized exchanges, how to do this cost efficiently, and also how to select the right assets to short. There's more than 100 tutorial videos in total in premium. The link is down below. It's thebitcoinstrategy.com. Of course, I'm also sharing in detail how I currently see the market. There's a premium update video every 3 to 4 days. And I challenge you to look at other influencers, what they said during those times, right? Have a look at the date, have a look at the title of those different premium update videos, and let me know who said already on February 18th that it might make sense to bet on falling prices, or that crypto stopped expanding in the last 2 to 3 weeks, or how your influencer is selling aggressively. I don't really see many other influencers saying it like it is. Most YouTube channels just sell hopium. Most YouTube channels just want to push up their own bags but they're not really looking realistically at the prices. They're not really looking at how much are people actually already in profit and when will that profit be taken. So if you appreciate during times like this that I keep it real, then of course feel free to give this video a like. Feel free to also subscribe. I publish videos regularly. And of course, feel free to also check out Premium. The link is down below. Looking very much forward to seeing you there as well. Cheers.